Hi, this is John Grant in Washington, D.C., with the REI Policy Institute. I wanted to take some time to discuss the state of the economy. 2016 obviously has gotten off to a bit of a shaky start. I want to first briefly discuss the stock market a little bit. Besides working with residential real estate investors, I've also been a consultant to hedge funds and institutional investors and analysts for probably about 15 years. I think what we've seen here is a combination of a few things. I think Fed policy is certainly one, but I think, in March 2009, when we hit the bottom in the market, the Fed began policies, quantitative easing and the interest rate drop that inflated the market. And as those policies are unwound, I think it's normal to see the market correct itself. And essentially what I'm saying is that the market was inflated and now some of the air is coming out of the tire, so to speak. So it's something that, I think is cause for some concern, but we're certainly in correction territory. But right now, I think there are some reasonable explanations for it, given the fact that the market was essentially propped up for so long. It's natural once those things propping it up move away that you see a downturn. Oil is another interesting element of the state of the economy right now. I think there's sort of a fundamental question. The prices right now are extraordinarily low, which is good for consumers in terms of, going to the gas pump. But you wonder, is this really indicative of economic strength or not? And I think fundamentally the question we have to ask is whether the decrease in oil prices has to do with overproduction or whether it has to do with the lack of demand, and specifically a lack of demand coming from China. I don't know the answers to that. I think we could see kind of a mixed bag. We'll see earnings reports coming out in the next couple weeks that could give us an indication as to what the state of the economy really is. But, things look a bit rough right now, and indicators are it could be a choppy year. In terms of the residential real estate market, the housing data shows, some areas doing fine and some areas not doing fine, and indications of bubbles in certain, areas, in certain regions. That's kind of traditionally how the market has worked. During the crisis, it didn't work that way, and there was almost an across the board, with an exception of a few areas, dramatic collapse. But I think right now, the data that we have, and there's more data coming out soon, indicates that certainly there are areas that are having problems. And, in the newsletter that we put out, we always have housing data in it, and then we kind of break it down regionally as well to give folks an idea of what's going on. So, I think initially 2016 may look dire, but look, I don't have a crystal ball. I don't know. But what I do know is that the most money is made during tough times, during a panic, when everyone decides to sell, when there is capitulation and there are simply no more buyers left. That's the time to start buying, and that's the time to make real money. We saw that in March 2009 with stock investors, and we certainly saw that in the housing crisis as detailed in Michael Lewis's The Big Short. So the question is, from a public policy standpoint, what do we do? What do I do as the representative of the industry in Washington? Well, there's a couple things. Many of you, I'm sure, have seen our video outlining our policy agenda on short sales that we came out with recently. We're going to hit a couple other policy issues. I think obviously GSE reform and the mortgage finance system is a big one for us. There's a few other areas that I'm sure we'll want to look at, but because we want to emphasize sort of playing offense and demonstrating the monetary value that a strong lobbying program can provide. But in addition, there are defensive measures that any good lobbyist puts in place as well. So as our meetings start, one of the things that we'll talk about with congressional leadership is, how the market is doing and how small residential investors can help. I think the failure to have that in position pre-crisis damaged this industry greatly. And we want to try to avoid that and make sure that the REI Policy Institute is seen as a group that works with members of Congress on both sides of the aisle to solve problems and also to get to open as many opportunities for investors as possible. So from a policy standpoint, that's our view on how to navigate an economic downturn should there be one. What we want to do is set this industry up to be in as best position as possible coming out of that downturn to both make money and to help the overall economy. In the coming weeks, we hope to have a new website set up, and that will detail our full agenda. We have our newsletter that's available to anyone who wishes to subscribe. And that's it for now, so I appreciate your time, and we'll have another video coming out soon. Thank you very much.